Good morning. Good morning. Good morning. Morning, Chris. How's it going, everyone? Feels great to be back. Was out all last week, basically. Thanksgiving. I hope y'all had a good week if y'all traded. Let's see. So, let's go over right quick what I'm seeing. And then I'll get to chatting a little bit. So, I expect price to keep going up. I'm looking at the daily chart here. And we have this inversion. This inversion here. And price came back down and tapped the top of it right here. And I believe we go up and we start taking out. There's some buy side liquidity here on the 1 hour chart and on the higher time frames. If I look here on the 4 hour chart, we left a little fair value gap there. Pulled right back into it here. Took off. The 1 hour chart. Basically what I did here, if you'll see this fib right here, I marked out this wick where price reached way up. Because right now, well, before that just happened, we had this bar here. And this is some buy side liquidity right here. I mean, this is relatively equal highs here on this 1 hour chart. Because if I go to the 15-minute chart, this is where I normally look at my bias and everything. But if I start here and it looks like this, and price was at the time right here, looking left, where's buy side liquidity? On this chart without zooming out, without doing anything, it's on the standard format. Well, you can't see anything, right? So what I do is I still focus on my sell side. So here there's relatively equal lows. Very nice, pretty clean sell side liquidity here. And that just so happens to be right where that inversion is, right where that 4 hour gap is. So that's where my sell side liquidity is. And then I mark out the 15-minute, the internal range liquidity, which is these 15-minute fair value gaps here. So I mark those out. All right, so then I have to go up a time frame to look for that buy side liquidity. And I had it here. There's nice, clean buy side liquidity. And it's like, okay, well, price already took that. So then I look left, have this big, like this, the wick right here, or it's way up there. If I measure this wick out, and I really only care about the 50% mark, the mean threshold of it, price was literally hitting it right here and rejecting. And I'll drop down to the 1 minute chart and show you. But then at the open, it shot up past that. So now I'm going to get rid of it. Well, let me show you the 1 minute first. See, right here is where price was rejecting off of it. But then, of course, that didn't stay that way. So I'm going to remove that now. And then, so now let me go back to the normal zoom on the 1 hour. Then I look further left. There's no imbalances or anything here, but I do have some very smoothness up here. Some nice smoothness where there's going to be some buy side liquidity right here. So I mark this, and actually I could probably bring it like right here to make it a little more clean. This is going to be my buy side liquidity for the 1 hour. So if price just keeps running up, I want to see it reach this first. Well, if it just keeps running, that's kind of what I'm looking for. And then, let's see. So that's pretty much my framework. I'm looking at a 1 hour buy side liquidity up here. Then, of course, we have last month's high there. This was the daily swing in last week's high. So let me go to the daily chart. Show you where I marked that. Was this swing here. Okay, so, I mean, that wick way up here. And then you see where this was buy side liquidity in this area. Price went up, shot right through there. So it might not go all the way up here, but we'll see. So since it took this swing in last week's high, we'll see. I'm not very convinced we're going to make it down to this sell side liquidity, at least not during my trading session. So, but we could. We'll see. Just have to see if price wants to take this 1 hour buy side liquidity up here, or if it'll kind of stop somewhere in this area and then come down. But there's really nothing between here and here to stop price. So I really kind of wouldn't expect it just to stop here. If I go to lower time frames, see, this is where you got to go way back, and you just can't really get that far back to see what imbalances or what's there. So that's why you got to go to a higher time frame. And then there's nothing on the higher time frame here. So there's probably a little bit of buy side liquidity in this area on lower time frames. But let's see, we do have, this would be an inversion right here. Might be the only thing that could hesitate price. I wouldn't really count on it. But in case price, so this could really like cause a little bit of chop right there, but I don't think it would really stop price from getting up here. Let's see what else. There's nothing else really. And if I go to my 4-hour chart, there's that 1 hour buy side, then we have this little bit of buy side liquidity up here in this 4-hour fair value gap right here. So that's just basically what I'm doing. I'm looking to see where price could reach up to if it does continue, and where it could potentially look for a reversal. 4-hour buy side liquidity. So that's kind of my framework, and then now we'll sit back and watch. Let's see, I don't think we ended up having an opening range. Yeah, we did have an opening range gap. So we have the low here. Price opened right there. Let me mark this consequent encroachment. 1725. All right, so reach there. Does it come back down? I don't know. We'll see. I'm not convinced because I think overall we're bullish, I believe, on the higher time frames. So we'll see. We'll see if it comes back down or not. All right. Good morning, everybody. That's my framework for the morning. We'll just wait and see what happens. We do have 21. Right down in this area is our new day opening gap from last week. Then we have a new week opening gap right down here as well. So it could come back down to there. We'll see. Good morning, Benton, Sharif, Corey, Mary, Abel. Good morning, y'all. And it's the first trading day after Thanksgiving break. So, in this time of the year, I need you should take caution, right? Because we have 1, 2, 3, like 4 weeks until Christmas, but there's gonna be different spotty days throughout all that. Yeah, there's news at 9:45, and actually, let me pull this up real quick. I think there's news most days this week. Pull this over. 9:45, 10 a.m. Then we have a FOMC speaker this afternoon, late this afternoon, so not worried about that. But yeah, 9:45 and 10 a.m. You got to watch that. And usually what I like to do is I'll go to forexfactory.com and I'll set my filters for red and orange folders. All this is good, and I only look at USD. It's kind of how I set my filters because I don't really care about much of the other stuff. And then I'll look at this week. And then, so yeah, I mean, this is NFP week too. So we got to be careful as we head towards the middle of the week. So today good, tomorrow good, jolts tomorrow. Wednesday it'll probably be good. I'm likely not trading Thursday. I don't know. We'll see. I probably will. It's just when you get closer to that NFP, Wednesday and Thursday can get really like, it could be a little ugly. But there's good news on those days. So we'll see. It might be all right. And then of course NFP on Friday. So David asked, where do I learn to draw all those things on my chart? So just watching ICT's videos on his YouTube channel. I studied the 2022 mentorship. To be honest, I don't think he doesn't have I guess like a 1, 2, 3, 4, note this, put this in order. It's just kind of what I've accumulated over watching all his videos I watched his 2022 mentorship. I watched a few of his videos on his 2016 core content to kind of learn some of the terminology and things. And then, it's just kind of a accumulation of all his videos of just watching them over time. But, I did one video too, where I explain, how I come up with my framework. That was a little while back as well. That was like, I don't know how old that video is. It's maybe 4 or 5 months old or something. So I could probably do a new one because there's some more things that I look for. And I kind of have a set framework now. Like I pretty much every morning, I pretty much do the same thing now to kind of lay out my framework. So yeah, that'd be a good video to do. And then there's another one I'm but I'm going to do. I plan to do it this week of the terminology for all the ICT concepts that I use, or he calls PD arrays. So just the terminology, not so much how to use them, because that's explained in more detail in his videos, but just like what they are. What's a fair value gap? What's an order block? What's buy side liquidity, sell side, like those things. So I think that'll help some people. Good morning, Enrico. All right, so we are coming down. See, this is you just gotta look for a reason price could stop. So when I was at the 15-minute, this is what I said. Price between here and here, I don't really see a reason why I would just stop in the middle. So if price is starting to hesitate, I got to look for a reason. Like, that's my job. I got to look for a reason. It doesn't, here's a golden nugget. Price never just stops in the middle of nowhere for no reason. Like, it just doesn't. So if it stops, you got to find it. So that's why I came to, where did I find that from? The 4 hour. No, the 1 hour. The 1 hour, there's this little bitty inversion. Like, it's not even that big. It can be very easily missed. It's right here. This is an inversion. It's a fair value gap going up, which is called a busy. And then it shot right down through it. And look here. Price came back up into it, right? It came up into it here, and it respected the midpoint of it and continued down. So this is a solid inversion. Like, that's a valid inversion. So when price comes back to it again for the first time, I don't expect that it'll just fly through. And that's why I said it could chop around here a little bit. It's like you got to find a reason. What's the reason price stops? No matter what. It just does not, telling you, does not stop for no reason. The day it stops for no reason, I don't know. I can't think of anything. All right. So again, 1 minute till that news comes out. We do technically have a market structure shift here. This is it's a good enough reason to reverse price back down. I still don't believe we're just going to run short. And I think we could come back down to the high of this opening range gap. I really don't know if we're going to come all the way back down to the sell side liquidity in this area down here. We might, but we'll see. That's why I take low-hanging fruit trades, because like technically my trade, this would be a good trade for me right here, but we have news about to come out. So I'm going to watch this and see what happens, because we did take this swing low. So we have a bit of a market structure shift and then this fair value gap. So you could look to short here, but here's the news. I'm not going to short this just yet because it's not really, this is kind of like a little bit of a accumulation here. This is not really a pullback because we had price just run up, and it's still like, this could be just a deeper retracement into this long run. So I'm not I'm not convinced just yet that this is going to go short. Here we have the opening fair value gap. Yeah, I was just about to say I'm about to put the first presented fair value gap, which is this one right here. This is the opening bar, right? So 930. That's not the first presented. The next bar is 931, and it has a fair value gap. So that's going to be our first presented fair value gap right there. And I'm not going to mark this because a lot of times I mark and note the opening fair value gap, and I mark it like this, opening bar. But it's so close, I'm not going to really mark that. And whenever you have two fair value gaps like this, you can just combine them into one. So I'm just going to kind of watch this area right here because I think we could. I'm not very convinced we run short. So we'll see. We have a volume imbalance here now. Wrong thing. Right there is going to be a volume imbalance. I want to see if price disrespects this volume imbalance. Because I actually believe we're going to run up here. So this is where I would be okay taking a trade long, even though we're already up. So normally, if we're running up like this, I want to look for a short, because I go opposite. You wait for price to run somewhere, and then you to draw to liquidity, and then you go the opposite way. However, I'm not very convinced we go down. So if we do run up to this buy side liquidity up here, that's when I would look to go short. Otherwise, I need something very obvious for me to go short. Like very, very obvious. See, now we have this pullback, and it was just a deeper pullback, I believe, a deeper retracement into this move up. And I think we're going to go up here. And that's why I was saying this right here, this inversion, can just cause some chop, basically. So now we inverted this fair value gap immediately. And then we left this one here going up, which also has this imbalance here. So we can include that imbalance right there. And I want to see if price comes back into here and then takes off. Well, it might take off without me. And that's okay. But if we come back into this area, I probably am going to look to long there. We do have that 10 a.m. news as well, but I really think the 10 a.m. news is going to get us up there. I think we might hang around here, we might pull back here, and then 10 a.m. news. If it's not up there by 10 a.m., it'll bring it up there. So if I go long here, I'll be in at around 23. Yeah, my stop would be below this low. It's almost 950. Right at about 950 is where I look to start looking for an entry. See, and here's the thing, though. If it does start to come back down to here, and it might not come back here. This might be a breakaway. It might leave this area open. I think it does come down, but if it doesn't, then see, like this swing right here, I wouldn't want price to take this swing anyway. So it's kind of like I kind of want this to stay open. And if you miss something, like you can also drop down to a 15-second chart and see if there was an entry anywhere. I'm not going to get into that right this second. But Let's see. There might be a little. No, that's really small. A little gap here. See, it's so small. I can't even grab this thing. Come on. That's like 2 points. Not even 2 points. A point and... Yeah, that's like 5 ticks. I'm going to wait. See what's on the 15-second chart here. See, we have these little fair value gaps here on the 15-second chart. This, be curious to see if price goes below here. And it depends too. If price does pull back into here, I want to see how price pulls back here. Like, does it start displacing down? Because if it does, then I may not want to get in it. And again, we have that news coming up soon at 10 a.m. All right, I want to see here what price does right in this area. It's respecting the body's open. The open right here to the tick. And this now at this point, this is a wick I want to watch right here. Can it close below the middle of this wick right here? Because you see how it reached, hit the open of this down bar, which is potential order block, to the tick, and then it closed up here, right? So now can this bar, next bar, close below the middle of this wick? If not, we're just going to go up. Little volume imbalance right there. Price is going through. See, and I may miss this move because it's not coming back into my entry, which is a fair value gap. See how price did not close below the middle of that wick? Body opened right there, reached down, closed up. So this is likely just to run up. And this is where you can have, and I'll probably expand, like I'll eventually start taking trades other than just fair value gaps. Because once you are able to read the market well, you can really take trades wherever you want. Like right here, when this bar closed, I could have just went long right there. Because my read is that now we're just going to run up to this buy side liquidity. But see, the other reason why I don't take anything other than fair value gaps yet, or that actual entry model that I'm taking, is because I know exactly where my stops are with those. With these, and I'm so strict on money management, you know, if I just take if I just take an entry that's not calculated like this, then so like for example, if I would have gotten here at 144, I could have put it at this swing low. That's 20 points, but I expect price could have still came down into this area. Now I'm not expecting it to come down to this area at all. But because I expect that it could happen, I would want my stop lower. So that'd be a pretty big stop. That'd be like a 40-point stop. But if I would have got in, if price would have came here, then I know for sure my entries in this area, my stop's definitely at this low, and that's a 20-point stop there. So it's all about the risk for me. So now here's a fair value gap right here. I could get long right here and expect it to go up. That's about 30-ish points. Got a little imbalance here. We got this order block here. And then again, that's the same thing. If I get long right here, where's my stop? Well, it'd have to be for sure below this swing low. It'd be kind of a low risk, 20 points, but I expect price could still reach down into this area. So I just wait. I don't like forcing things like that, because really you can get long in any of those areas up until it hits this buy side liquidity. The only issue is that you don't know exactly how far it's going to reach, because it shouldn't reach back below this right here. Got to include the volume imbalance. It shouldn't reach below that, but it could. It could reach down into this order block in this area. So because of that, if you put your stop too tight, you risk getting knocked out and then it continuing up. And those are the things that mess up my discipline. And that's why I just can't get off my rules, because I can't do anything that risks messing up my discipline. I'd rather not take a trade that day. All right, you see how it's reaching down? That's why you gotta be careful if you take entries other than a specific entry model that you're using. So we inverted this one. Let me get rid of this yellow one here now. There we go. And again, price doesn't just stop in the middle of nowhere. So I don't have reason to believe we're just going to stop there. 4 hour. Yeah. So we could be reaching down to here, and I'll watch. We could be reaching down to here, hit this volume imbalance, and then continue up. But we'll see. Unless we get some major displacement and obvious that we're going to go down, then I will. Other than that, still think we're going to reach up here. That's at 184 area. Yep, 184. See how I reached down into this right here again. Got news in 1 minute now. This is where you got to have patience. Don't fall for. That's what the markets do. They give you little something. They give you teasers here and there. They try to give you the bait. See if people take the bait. Let's see if this inversion holds up. I don't think it does, but we'll see. If this inversion holds up and then we could trade below this swing low here, that'll be a sign that we could be moving down. But we need to take this area out first for me to have any belief we're going to go down. We're about to get a 15-minute fair value gap right here. And a 15-minute volume mounts at the same place. Again, this is the opening bar for the 15-minute. It's a 50-50 for price to trade through it or not, based on what I've seen. So I'm not going to just say, oh, there's a 15-minute gap there. There we go. It's reaching up. The inversion is not holding like I thought. Like I figured it would not. This would have been a nice area to get long at right here as well. But, I mean, it didn't reach into that. I bet there's let's see if there's a 2 minute. Nope. 3 minute. Nope. 4 minute. Nope. No fair value gaps right here. Just, that's manipulation right there. And now we're too close to this buy side liquidity for me to take a long. We do have this volume imbalance right here as well. And what I would prefer to see is I want to see price go ahead and take this buy side, invert a fair value gap, and disrespect this volume imbalance. So it looks like we're going to have a little bit of a waiting game now. I mean, it's always been a waiting game, but, you know, now there's definitely not an entry I'm looking at. Because even if, like, you're very convinced price isn't going to come down further and you're going to go long, I mean, for me, 20 points, 20, 25 points, that's not a trade I'm looking for. Just because my stop would have to be at this low. I mean, I guess it'd be a 1-to-1, but nah. I'd rather wait till we take this 1 hour buy side liquidity and then see if we get a market structure shift to head back down. And if we did head down, I would target right here, the middle of this opening bar, fair value gap on the 15 minute. The middle of it, consequent encroachment, is right at the top of the first presented fair value gap. That'd be my target if I were able to get a short. Yeah, Sharif, I don't like to squeeze stuff in, even though I'm sure this is going to go up here. I don't like to just squeeze it in. If there's ever, like, my mentality is, if there's ever a trade that I take and it loses, and after that trade loses, if I could tell myself, dang, why did I take that? I shouldn't have taken that trade. If I could tell myself that after a trade loses, then I shouldn't have taken that trade. And I'd just rather skip it. Now, very interesting here. I'm looking at my tabs up here. MNQ or NQ is up, right? ES is up. YM is down. So let's check that out. Uncorrelated. Look at that. So when the market's uncorrelated, ES is starting to come down. Look, we have a swing high, lower high, lower high. Lower low, lower low. We may be looking to get ready to come down on an NQ. And usually when the markets are not correlated, when NQ is not correlated with either ES or YM, that's a sign that you're probably not going to get anything until it gets correlated. That's really all I'm looking for. The main thing I'm looking for. So this would be what's called a SMT. We have higher high, a high, lower high. NQ is giving out higher highs. That's divergence. And that's even more reason for me to believe we're going to pop right through here and then head down. How far we head down, not sure, but I like this area for this as a target. So I'd like to go ahead and just give it that little pop first. And then invert this right here quickly. Let's go ahead and leave it yellow to encourage it to invert. Come on. Pop through. Give us a little pop. Come on. And the 15-minute, oh, don't get that close. Come on, pop through. If you look, the 15-minute is trying to give us a little imbalance right here. So if this thing could just pop through, and there's still 8.5 minutes left. If it could pop through and before 8.5 minutes come back down through here, that'd be great. That way it does not leave that imbalance and it allow us price to run down. But anyways, yeah, I was saying earlier, December, and once we start getting close to them Christmas, holiday, New Year, I'm going to be really spotty on my trading, on where and when I'm going to trade. Last year, August of last year, 2023, is when I started learning ICT. By December, I thought I had it pretty good. I thought I was doing good. I thought, I got a nice payout in November. Which again, I think that was fool's gold. I was just getting, I was taking advantage of good market conditions with ICT, and I didn't know enough yet to know when not to trade and all that. So by December, like the third week of December, man, I just hit a losing streak. Started losing, and then by January, I was like, I had a blown accounts and very low drawdown accounts. So, but I'm not, of course, I was just getting started. I was just learning. And then, of course, so we have that this year. Plus we have, change of presidents come in January, inauguration and all that. So we just have some things we just got to be aware and be careful. So you see price popped through now. What I want to see is, I don't want to see, it may go up a little higher because it barely wicked through. I want to see it come up, take some liquidity, and then immediately drop. And don't spend any time above this. Like, I don't want it above this 184. I don't want to see a lot of time spent above it. If any, it could drop now, and I'd be happy. Oh, you know what? Let me check one other thing. 994. Okay, never mind. I was checking the new week opening gap and the new day opening gap, but they're way down, lower. All right, so here we go. See if we can we need some very obvious displacement. And then we would have what's called the market maker sell model. This look here. For some reason I always struggle getting out of that little marker. There we go. Job of the Hut sell model. But I need some obvious displacement. I need it to invert this, stay under here, If I measure, let's see. Let's measure this range for today. If that's the high. Equilibrium's going to be right here. This low. This low would be the low-hanging fruit. Or equilibrium. If we were able to get a trade up in this area. In the premium of this range here. But I don't really like this range. Let's see. Let me go to the 15-minute chart. Here we go. This is the range I like. Right here from this sell side all the way up here. First presenting fair value gap. Equilibrium is right below it. But we might not be done going long just yet. Let's see if we... What would be the nicest thing to happen, though? See, we hit this fair value gap. Is if we could pop up, create another fair value gap, going above these highs, and then immediately come down and invert it. That would be very nice. But that might just be me asking for too much. Oh, market might. Let's see. You gonna do it, market? Come on, pop up. Hey, sometimes it listens. The market whisperer. Oh, we got a little over 2.5 minutes, and we'll get that 15-minute fair value gap. Right there. So if price were to keep going higher, this is the next stop right up here. And then if that's the case, I likely won't get a trade today. All right, took these highs, but it did not leave a fair value gap right there. Did not leave an imbalance, which is fine. Just need obvious displacement down. Yeah, typically on days where it just goes, I normally don't get a trade unless if, like here, if we would have came back up, if we would have touched this area, anywhere this area here, I would have went long to that buy side liquidity there. So that was my roughly 60 points is what I was looking at. Just didn't get it. We still got plenty of time for now. All right, now that we've closed above that buy side liquidity here, I don't want to see it spend any time up here anymore. Now I really want to see it displace down. We do have some new day opening gaps up here at 211. So I kind of think it's going to hit that first. Right there. From November 12th. So it might hit that. But yeah, once it reaches liquidity levels, like I really want to see it go not spend time there for me to be more confident. So we'll see if we hit 211 first. It's also Monday after holiday weekend or after holiday week. So, but yeah, that's why I mean, the higher time frames are pretty bullish. So that's why I didn't have a lot of confidence in price going down here to the sell side area, opening range gap and all that I was looking at. Extend these out a little bit. Anybody do anything fun over the weekend or last week? Besides Chris, I know you went and made millions of dollars at the casino. I enjoy going to the casino, but believe it or not, I hate gambling. Like, I've never been a gambler. I hate gambling. So, but I do like, I like blackjack and a few different table games. Yeah. Yeah, I just go for fun too. I haven't been in a while. Here we go. We need some displacement under this buy side liquidity. Yeah, I mean, that's how you have to look at it, in my opinion. You just go for, it's like a night out, like if you're going to go out date night or something, you spend a couple $100, just do that. I want some obvious displacement. I don't want this little reaching. I want some obvious displacement through these lows here. And then invert all this stuff. Yeah, Daryl is he's on another level. $2,000 is like, for him, is like $2. It's like me placing a $20 bet. Yeah, there you go. All right, we might get this little. So yeah, Chris, we have this little inversion here almost. Well, yeah, this one we're gonna invert this one and leave a tiny one, but I don't like this yet for a short. This is not where I would take a short from. We don't have clear displacement. We don't have a market structure shift. It's just starting to show the signs. So remember, this is what I look for first, the signs of a potential move. So we need to take these lows, and I really want to see it invert this guy right here and close below this volume imbalance before I'm okay with a short. Or if it takes all that out and then pulls back up into a dealing range of this leg into, for example, here. I mean, it's very little, but we'll see. I'm still not very convinced just yet. This could still just be a pullback of this move here, because I do have potential areas it could go to. I don't think we do. I think we will see a move down, but it's just being patient and knowing when. See, I like this fair value gap if we can leave this one here. This is what I like to see. I want to see it take these lows, which it's trying to do. I want to see this stay open right here. At 37, 36 seconds. Sorry. 1 second here. All right. So we have this little bitty fair value gap. That's not something I would short yet. This one actually did not form. We just had this little bitty thing right here. Little bitty thing. And it hasn't even came up into it, but and then we have that one up there. So these are just signs. They're still signs. I'm waiting. We did take these lows, but this just could be a little bit of a liquidity grab and keep going. We have to wait. We have to wait. And see how it respected the mid-level, this consequent encroachment of this fair value gap right here? Let me change it. Its normal color that I like. See right there. So we have to wait. This is why it's important to wait. See, another thing I just noticed on this wick. Remember I said when this was pulling back here, I said, oh, watch this wick right here. Body's closed here and it reached down and closed up. Look at this. This is when the market's lining up perfectly. Look at these highs right here of these wicks. And then the body's closing here. This is a mitigation right here. And the body's closing right there. Reach down. Body's closing there. So these are people that got short in this area that are getting out back then. All right, so we're in this little fair value gap right here. It's not anything worth marking, but and then that inversion is right up here. But the important thing that I'm watching, though, is I want to see price remain under this buy-side liquidity, that old buy-side liquidity. I really don't want to see price come back up above it. So if we can stay under here, I don't want it to come back up above. And we need to make our move within the next 10 minutes. Or else I won't get a trade today. Because the closer this gets to 11 a.m., the less likely, especially on a Monday, that we're going to get a move. It'll just continue up to this area. And if it does get a move, whatever, it's fine. I just won't be there for it. So my framework, though, like I said, had it if I would have gotten this right here, along in this area, especially here. But see, this is where earlier I was saying I could have gotten long right here when this body closed and couldn't reach the midpoint of this wick. That would have been at about 44. And then my stop, I said, would have had to for sure be under this. So it would have gotten close before it hit the target. But that's the risk. You know, you got to have your stop. The safest place would have been under here. But that would have been 44. And let's say it was under here. Yeah, we're looking at 30, 40 point stop. And then from 44 up to 84. That's 40 points. But, yep. But I'm not there yet. I'm not taking anything other than my fair value gaps. So here's a wick to watch. It's not a big one to watch, but it's just one to watch. Price reached up to that buy side liquidity again and then closed down here. So I'd want to see if price can close above the midpoint of that wick. We got 15 seconds. It looks like it will, but this will be a sign that if it does, yeah, then it's going to go. Keep going. There we go. Closed above it. Oh, barely. Look at that. It closed and immediately shot back down. But we'll see. We'll see what happens here. Still hasn't closed up above this buy side liquidity again. But it's looking like it'll keep going for the moment. Still staying under. How did I get to that buy side liquidity again? Okay, so on the 15-minute chart, this is I look at the 15-minute chart for my bias levels and all that stuff. But we were about right here in this area. So when I always look left, right, so I can find my levels. Here was the relatively equal lows. So I had sell side liquidity, but because we're already up here above this last high and we were just up, when I looked left, there was nothing there for me to see. So because there's nothing there for me to see on this 15-minute chart, then I go up to the 1 hour to see if I see anything. And kind of the same thing. We were here. We had just taken this high. So we were about this area. And then when I look left, if I just go all the way left over here, I look to see what's next above. So I look, and I'm looking for any fair value gaps or any smoothness, which would be like this. Right here, you have some smoothness where you have all these little highs. Then you have this high right here, which would be like the ultimate side of that buy side liquidity. Right there. So this is where I marked that buy sell liquidity from the 1 hour. And then when we reached up, or before we reached up, that's when I found this inversion. There's also, now that I'm looking at it, an inversion right here as well, where that buy side liquidity was. So, yeah, let's see. And look how we made it right to the middle of that inversion, and we haven't closed above it. It's trying, though. This is going to be a day. See, it's 10:30 now. I'm not going to get a trade because it's very likely to continue up to here, because above that area, there was nothing else on the 1 hour chart. So then, again, same concept. I got to look at the higher time frame. Since that 1 hour, there was nothing else. I mean, yeah, you have this high, but then there's nothing right here. So let me go to the 4 hour. And that's where I have to look at the 4 hour. What's next? We have this fair value gap. We have this high. Then above that, I'd be looking at this wick right here to see where we reach up to. And I think we are going to get up there eventually, but we know the market doesn't just usually just go straight one direction. It'll go up and then pull back, up, pull back. So these higher time frame pullbacks are usually whenever I can catch a short, or if it, vice versa, of course. But it's not displacing. And I mean, it's 10:32. It could literally wait until 11 o'clock. It can wait until 11:30 if it even does. So at this point, my framework only lasts, if I don't get something within the hour, then by like around 10:30, then my framework, it's not going to give me anything after that, usually. I mean, it could, but like I said before, I tend to do dumb things the longer I sit here. Because, we want to press buttons, especially streaming, right? Like, if I'm not streaming, I can do other things. But streaming, everybody's watching. Y'all are watching. Like, people want to see buttons click. People want to see trades. People want to see that P&L light up, red or green. So, but that's where, like, you just can't fall into that. So, and yeah, so that's gonna be it for me for today. No trade. It is what it is. We have the rest of the important part. So here's the thing too. My days, I look at them. First of all, I never look at success in terms of how much I made or lost. Right? Like I don't look at that. I look at success in trading of, did I get the read right? Did I trade right? Did I follow my rules? Because everything we do with trading, we know the byproduct of it is money. So I don't have to focus on the money. And that's going to be what's in my discipline psychology course. Like, I'm going to hit on that so much, and I was working on that over the weekend. And we know that the byproduct is money. So if I focus, if at the end of the day I don't get a trade, but I read the market well, that's a win for me. So, hey, that's the way I look at it. And of course, you're gonna have all these people on YouTube talking about, you gotta make all this money and this and this and that. Man, I don't buy into that. I'm here for the long run, not for the flash. So, anyways, all right. Well, I'm gonna hop off here. That's it for me today. No trade. So I'll be back tomorrow, and hopefully we get one tomorrow. We'll see. As long as we're reading the market, that's all that matters. So thanks for joining me today and being here, and I'll see y'all tomorrow. And as always, trade well.